Good evening, folks. So, just back with another trade breakdown, and do apologize if there is a bit of audio feedback. I've been having this issue recently, and I've been trying to fix it, but usually at some point in the video it'll go off, and sometimes it's usually at the start and then it goes off towards the end, which is good, or sometimes it comes on. So I will try and get this sorted, but I'm just in a bit of a rush at the moment to make this video, so I thought I would just continue with this and hopefully it fixes itself. So just bear with me, and hopefully throughout the video the sort of feedback will go away. Um Now I'm just looking at the trading view from yesterday, and this is just how yesterday's daily candle closed. So if we just kind of ignore everything here and just look at this, we have our main support from here, which is the first support that's formed after our breakout. And if I just hover my icon over the support, you can see every time we come down to this area, it's a heavy area of reaction. So the fact that yesterday's candle formed a support and rejected off this, and even if you look at most recent, these regions here, um it was a good sign for potential upside. If I just go to the 4 hour, this is basically how we closed yesterday. So very bullish. Now we haven't closed below the most recent resistance. So if I just skip through a couple of candles until we get to 6 o'clock. So this is when my session starts, from 6 o'clock to 10 o'clock. And if I just look at this, what can I see? Well, what I can see is we are moving down in the market, putting in lower lows, lower highs, and with this close above here, this closes above the most recent support and resistance. Okay, now if I just draw a box around the most recent support and resistance, looking at the based on the 4 hour time frame, this is this. Now we have zones in terms of where the wicks come to, which is down to here and down to here. Now, but in terms of candle closures and the bodies, this is what I'm looking at, right? So what I like about this is closed above this resistance, which to me is a potential early sign of a change in structure. Now, just because we have candles closed above doesn't mean we're going to continue to go to the upside. Now, of course, we have been bearish, so this could just be a deeper retracement to continue downside. But the reason I'm not interested in that, or don't, really like that idea, is because of the rejection that we had yesterday from our daily support level left. So if I just draw this zone on from the support zone in a different color, we can see that this is the zone here for the support. So if we just look at where this 4R that's formed the resistance, where this rejected from, it rejected from the body, which is here, and it also rejected from the zone. So when we drop down time frames, we'll see more accurately the reaction and the support formation. So ultimately, this is the most recent support and resistance prior to that zone, which is basically here. So we can kind of see how these kind of, overlap or interchange. And yes, this candle has closed above the resistance. However, it hasn't closed above the actual zone in terms of the resistance zone, from the wicks. So from here. So that is still a reaction and a rejection from that point. So that could still mean that, well, we haven't initially closed outside. What would be a stronger confirmation would be a close outside and above, and then we could, if price pulls back, we can form a higher support above the zone and start to leave the zone, right? That would be ideal. That would be a stronger confirmation, right? However, price doesn't always work like that. Doesn't always give you what you want. So if I just remove these, and what I'm paying attention to mostly is the most recent support and resistance. on the 4 hour. This is the most recent support or resistance, sorry. This is the most recent support. This candle closure closed above the resistance. Okay, so to me, this is now the target. Once this resistance is formed, this is the target. What has the candle done? It's pulled back to a previous level of structure and it's reacted from that. Okay, so to me, I'm only looking for upside. The session bias, because it's a bullish and a bearish candle, is mixed, which means buys and sells are options. However, for me, I was just looking for buys. Okay, so I looked at the session bias, it's mixed, and I said to myself, what makes more sense for me? Buys made more sense for me. Okay, and another thing, when I look at the most recent support and resistance in terms of the 4 hour, and you know that we closed above, and I'm seeing this is just a pullback to this previous structure to hold support and continue. One thing I also am looking at, if I just bring on my drawings 1 second. If I just bring on my drawings here, as we can see, this is a resistance zone on the daily. Okay, if I go to the daily, it's gonna, this candle, because we're in the replay tool, is going to flip bullish and it's going to go to where the daily is at the moment. But just to give you an idea of the zone, we can see that when we're in this zone, it's a reaction zone. So the fact that we have pulled away from this zone, we've pulled back to this zone, and then as we start leaving this zone, that's a sign to me that I want to get involved. If I just drop to the daily, here we can see resistance zone, wick rejection, 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 close below, look for pullbacks to sell, and then as we push above, look for buying opportunities leaving the zone. So that is my idea. And if I just bring these back off, so this is when I get to the session. Now if I drop to the 1 hour time frame, again, not even needing to look at the structure, but what's happened in here, we can see that we have 1 hour sort of structure in here. So you could look at this from a point of view that this is resistance, support, pullback, continuation. So like support, a higher support. So on this leg down, the fact that it validated this support, you could say that that technically could be a change in structure, the start of back to the downside. What we need to see is some form of lower resistance and then continuation. However, on the 1 hour time frame, although we have closed below the most recent support, we have basically reacted at a support just below. And if I just get rid of these drawings 1 sec, it doesn't really look to me that selling opportunities are valid right now. I need to see some form of lower resistance. However, my bias is buys. We've closed above. I'm just seeing this as a pullback to previous structure to continue up. Now, it looks more attractive to sell on the 30-minute, but it doesn't look as attractive on the 1 hour. If I go to 30-minute, we can kind of see that on the 30-minute, we've actually closed below the support. And when we look left, we have nice clean traffic here. So we could pull back, form a lower resistance, and continue down, which is absolutely valid. It makes complete sense, but that is only on the 30-minute time frame. And on the 15-minute time frame, when you actually go to the 1 hour time frame, we haven't actually closed below the support. You know, we've closed below this support, but not this support, which is made up of what's happened here. That's why the support is here, because of the reaction we have seen here. So when we go to the 30, we have closed below support, but on the 1 hour, we haven't. And again, the 1 hour is a stronger confirmation. And we can see that this rejection wick here to the downside, to me, doesn't really scream sells. So if I just fast forward 1 hour, we can kind of see that this confirms the support for me. So what I really like about this is we have our target, we have our pullback, and we have our confirmation of support. So after this candle, to me, this is what I like, because essentially, if I'm looking at this as the most recent support and resistance, most recent support, we have like a mid-range level in here. If I just actually draw this up with a rectangle, this is like a mid-range level for me, right? Mid-range support. Essentially, this is like, you know, the lows here, the supports. We have the resistance up here, and this is just like a mid-range level. So the fact that we have pulled back, rejected from the bottom, and closed back above the mid-range, I'm looking to buy this up to here. So that's my trade. And if I just get rid of these drawings and I bring on my tool for here, I just bring on this, and it might look a little bit messy, however it's a lot more clear. So we have a mid-range resistance, mid-range support, we have our initial Asian low support, Asian high. The fact that we've closed above mid-range resistance, I like this. This really tickles my fancy. So why may this not be a good trade? Okay, so we'll talk about that first. The reason why this may not be a good trade is because the bias is mixed. This could just be a pullback to form a lower resistance somewhere in here to continue down. Also, the 1 hour looks good, but as well as that, why not this may not be a great trade. From a stop loss placement, if you went below the actual support and the wick, you're down here. Your trade is to here. From a risk to reward profile, it doesn't really make sense. Now, I went below the candle that confirmed the support on the basis that this is a confirmation for me. This is strong, and I like the fact that we closed above, and I like the fact that we're above this mid-range resistance, so this could also act as a support. So this is my first point of contact for for price to potentially respect. So this is like my first barrier that I'm anticipating, if we come down, that we can respect this level to continue up. As well as why it might not be a good trade, if we go to the 30-minute time frame, there is no structure on the 30-minute time frame. You know, essentially your buy started down here or here, right? But I wasn't at the chart at this time. If we go to the 50-minute time frame, again we have no structure. The fact that we close below on the 15 and on the 30, what may have been a better indication of buys was to wait for some form of lower resistance, or sorry, some form of higher support. So wait for price to pull back. The fact that we have a support, form a higher support, and then maybe as price starts to leave this zone, look to take that trade to there. Okay, so looking at those options, no structure on the 15, no structure on the 30, a big stop loss. However, relative to target, it doesn't matter to me. My stop is in a safe place, I believe, so that's all that matters. Now, the reason I took this is because I based this trade off the 1 hour. After seeing this 1 hour candle, the size of that candle, the sort of momentum, the fact that we closed above mid-range resistance, there's a clean candle left. There's no reason why the next candle can't do that. Okay, just as much as this has done this on the way down, why can't we do that on the way back up? Okay, so that's my thought process. And also, if we start to pull down, we might pull into a previous level of structure, which is this mid-range, and then potentially create like that there, right? So that was what I was thinking. Now, the sort of downside to this as well is, what time is it? Okay, so the time of this trade was at 7 a.m. So we have a 1 hour to London open, and typically recently the volume has been coming later on. And there is sometimes like pre-London pullbacks before London open. So what I was doing, in entering this trade, was risking the potential chance of a pullback. And I didn't know where that pullback was going to come. I didn't know if it was going to respect this. I didn't know if it was going to just hang straight down. I didn't know if we were even going to get a pullback. So I took the trade on the close. Price kind of pushed down a little bit, pushed up. So if I just skip through 1 hour, this is how the hourly closed, right? So as we can see on the 30-minute time frame, just to make it a little bit more clear, we price opened, we pushed up, we almost came to 0.5%. We almost came to 0.5%. Now, typically, that's when I would be moving my stop loss to there, or I would be securing everything. However, I'm not. I'm trying to steer away from that just to test something for the next month or two. So I didn't manage the trade whatsoever there because I'm trying to progress. Okay, so price come all the way back down, and on this time frame, that candle closed doesn't really mean anything because it hasn't broke the low of the previous. Yes, it's pushed up and rejected, but it's just one candle. You know, what's to say that the next candle isn't a bullish candle like this, and it's just a lower time frame pullback to still continue higher? So that candle alone, now if we look at this on the 30-minute or on the 50-minute time frame, we can kind of see that we formed a resistance, which on the 50-minute time frame closed below the previous, right? And the next one confirmed that yes, it was a little bit, you know, of a nothing candle in a sense. But what my management style was with this trade was when we start to come back into this range, leading into London Open, I was going to manage my position. So this little red line here is the low of this 30-minute candle. So if we look at this on the 1 hour, we can see that that's how the hourly closed. But if we look at it on the 30-minute, when this formed this resistance, after pushing up how many pips, it pushed up, you know, 24 pips, and formed a resistance. I said to myself, well, look, we've got 30 minutes left to London Open. There is a chance that if we close bearish, we might continue down, leading into the Open. The session bias is mixed, so there's every chance that we could push down with the volume. So when we started to break this low, I closed my position. And the reason I done that was because, see, if we are going to continue down, we will likely, if we're breaking into this mid-range, we will likely test the opposite end of the range, which is here. Okay, between here and here, if we're breaking into this, we'll likely test the opposite end. And if you take into account London Open and volume, that could be very quick and that could be very volatile, and price could end up down here somewhere. We don't know, but the session bias is mixed. We could go up or we could go down. So I was anticipating that with the hourly close, we would get a bullish candle. Whether we hit target before 8 a.m, I don't know. But if we close somewhere up here, then when we open, we would be moving in the direction that we close, which might be bullish, but we would be higher into my target, which means I would have a lot more room to manage a position if it does start to come back with the open and with the volume. So I closed this position, and another factor was, which was easy, was, well, if we start to break back up, I can just re-enter, you know. So that's how the 1 hour closed. And if I just skip through the next 30 minutes, or the next 15 minutes, I'll use it 50 minutes. What happened was, we opened with London volume, we pushed down, we broke the low, and we pushed down to the bottom end of this range. So, and then we closed bullish above the previous. So to me, you know, I could have been saying to myself, if we were in here, like at this time, that candle on the open was, you know, something like this, right? At that time, that candle was like that. So to me, I didn't want to be in a position where I was going to cut my trade here or potentially take a full loss. You know, there was no, I didn't know the price was going to stop exactly here and then go this way. It could have just continued on, right? So I was happy to just close there. And if we come all the way down here and hit stop loss, it's well managed, right? But if we don't, then we pull down maybe and create a higher support and we start to leave this, then I can re-enter, and I would have my confirmed higher support, which was what was anticipated could be an option. So when this 15-minute closed, I'm just looking at this as a liquidity grab, right? Because we've pushed down, failed, formed a higher support. Then the next candle, if I just come out of the drawn tool, one sec. The next candle continues to target. So if I look at this on the 30-minute time frame, what I was potentially anticipating with this half seven candle, potentially doing something like this, and this just being a pullback to the previous level of structure to continue bullish, right? That's what I was potentially anticipating once this candle formed the resistance. Once this candle formed the resistance, I was potentially, because we reacted here, I was anticipating, well, is this just going to be a pullback to do this? And it wasn't, but what basically I was anticipating happened in the next candle, it was just we needed a deeper pullback to do this. So when the 30-minute, the second 50-minute candle started breaking above the resistance formed on the 30-minute time frame, which is where I entered a position again with my stop loss below the wick and with the same target. So I ended the trade in a little bit of profit. You know, I took a loss, and then I still gave my option, my trade, a second chance, and it worked out that it won. So I ended that in, you know, a little bit of profit, which is good. So there was, you know, a good few lessons in this. I think realizing or knowing the fact that we usually have later, recently I've been seeing that like the opportunities are becoming after London Open. You know, usually let the volume do its thing, you know, give you the direction, and sort of like ride that. And I think, you know, in knowing that, like the takeaways from this today would have been be a little bit more patient. I think as well the fact that the 30, like there's nothing wrong with taking that early close, right? You've just got to realize and understand that if you take this close, there is a risk of lower time frame structure pullbacks because we haven't had structure on the 15 on the 30. So I knew that was going to happen, or I didn't know it was going to happen, but I knew it was a possibility. So in knowing that it's a possibility, you're accepting that you're going to have some form of drawdown potentially, right? Whether that's a wick creation on the 1 hour to continue bullish and close bullish, or whether it's going to be a couple of hours of downside to form a higher support to continue, right? There also still is an option there that because the bass is mixed, that this is just going to be a lower resistance to continue down, you know, because we closed below support here. But the fact on the 4 hour time frame we closed above resistance, the previous day was formed as support, we are leaving a daily resistance zone, which the previous 4 hour, yes, it closed bearish, but it reacted and rejected with a wick, where we've sort of like changed in structure back to the upside. Buys made more sense for me today, regardless of all the previous days bearish action. It's just kind of where we are in the position of the chart on the higher time frames that is key for me. So yeah, lessons to take away. Maybe because the 15 and the 30 didn't have structure, just wait for that. And usually if there is no structure coming up to the open, then let the open do its thing, and then maybe it'll give you an opportunity. Like if I didn't take the trade that I took today in terms of the early entry, this is the trade I would have taken. You know, I would have just not taken any drawdown. I would have just entered as soon as this 15-minute formed a support, enter, and you would have had a winning trade. So I think in the fact that I did take drawdown and had to manage a position, it just shows it a little bit more patience and time, and wait for the time where you've been seeing the sort of volume come into the market, and it's usually after 7:30, to just rely on that data to sit on your hands a little bit. But I know it's a long video, but I just wanted to break this one down because it was quite the trade and quite the breakdown using the sort of multi-time frame analysis. So if you've watched it, appreciate you, and of course just make sure you subscribe.